Hey, what's up you guys? In this video, we're going to talk about the Fibonacci retracement and extension tools, which is my secret sauce, and there's a specific way you need to use them, which I cover in this video as I walk through one of my students through the process of putting those indicators, or I should say key support and resistance levels and price targets on your charts. Now this is going to be really important for any trader of any level to understand, and I try to make it as easy to understand and follow as possible. So without further ado, you guys, let's jump into that. When there's these big days like where there's a lot of selling, you have to retarget, you know? You have to you can't just use the same Fibonacci extension price levels like the whole day. You can, I mean, and it'd still be kind of effective, but you know, when you have big drops like we've just seen several times on Q, you have to adjust because your price targets have already been hit, you know? I want to close it because I just kind of don't care about it anymore. Zoom out to the 15 when you're drawing them, especially when you're first starting. I can draw them on any time frame. That's because I know exactly what I'm doing, you know? So just start on a 15 minute though, so you have like kind of a broader sense, and we'll just place one Fibonacci extension. We'll start at the very top of the day. Now this is different. If this had popped up above pre-market highs, which is this green dashed line, then we would have set the Fibonacci, the first point, on that line, right? But obviously that didn't happen. We're going on the high of the day. So high of day here. This move right here is one, and to me, this is one move. This isn't like 1, 2, 3. This is like such a strong move. I could count this as just one move. So if I had been watching this, which I wasn't at the very start of the day, I didn't catch this first part, I would have drawn my Fibonacci's in like this down to this mark, and then it pulled back. Say I wanted to enter here. Well, I'm just gonna kind of like guess that, you know, this is where it's gonna end up pulling back to based on how it's already trading, right? Like, I don't think it's gonna go higher than this. So I'm gonna draw my Fibonacci in just kind of in anticipation. Or a better way to do it would be once this red candle forms here and you have this full engulfing candle, now I can go, okay, that was an engulfing candle. I can place my next point here on that engulfing candle, right? That was the pullback, right? That was the pullback on the downtrend. Right. So I'm placing it there. Now, if I look and see where those lines, the lines that just got drawn in, it corresponds with where this candle ended, where this candle started, where this candle ended up going down to the 100%. And this was actually the first trade that I called out. I ended up deleting this before I went live, but this is the first trade I called out was based on these Fibonacci's. And now, once that is done, and once we have this next pullback to right here, now I'm gonna delete this. I'm gonna remove that from my chart. I'll just clear everything right now for the sake of this lesson. That's our first, like, okay, I wanna enter here. This is around 10:15, 10 o'clock, 10:15, 10:30 was when this was like happening. And then once that broke down and we saw it go down to our 100% or almost to our 100% retracement, now I'm gonna delete this curve because it's kind of, I mean, it's definitely, look, it's still useful. I can still use it for support and resistance. You can clearly see that it's trading in that range, but I'm gonna remove it and I'm gonna go from my new swing high, the one that I ended on last time, down to my new swing low, which is the old low of the day, up to my new swing high, right? So now I've got my new price targets. If we were to see at the end of the day, if we don't see more buying pressure and we see volume pick up and it's still below this old low of the day at 96.21, then this trade is likely going to continue to sell into the end of the day. You know what I mean? It's like if a price stalls out for too long, it has to make a move eventually, right? If this price were to stall out right here below the old low of the day for the rest of the day, it would form a bear flag. And at that point, volume picks up. There's not enough bulls that are enthusiastic enough that think that this is gonna go up tomorrow. And so the chances of it going up tomorrow are slim because nobody wants to buy it, right? So now we've got the reason that we can make a shit ton of money on the downside is because one, nobody wants to buy it. And now we've got short sellers like myself that are coming in buying puts because they see how fucking weak it is. You know what I mean? It's like, it's a combination of, in a series of like, it's like a fucking battle, right? If you don't win in the certain amount of time, especially on these like large cap, mega cap stocks, you know, not that Affirm is a mega cap, but it's large cap and it's a battle. It's a war. It always will be. For these next price targets to be valid, I can't have a substantial pullback. There can't be another substantial pullback. If there's another substantial pullback and we go back above that old low of the day, that 96.21 at that green dashed line, the likelihood of us capturing the whole trade that we wanted isn't there anymore. Like we've dramatically reduced the momentum to the downside because we couldn't muster up enough energy to get even down to the 61.8 retracement. You know what I'm saying?
Right. And then on that, so if it's a downtrend and you're trying to get fibs for the coming down, your first quick point is going to be the swing high to its swing low, or vice versa.
Yeah, the very first line I draw is from the high of the day. Always. Like I'm almost never like not drawing in that extension just to see if it's respecting the Fibonacci extension the way it should or the way it usually does. I would say always Fibonacci's work because they're always giving you key price levels, but it's the level of how well they work. So you just kind of want to get a sense of that no matter what. So you want to start the high of the day, go to a swing low. This is a 15-minute chart. I usually kind of do it on 5-minute though, because then I can kind of identify like smaller moves. So in this, I can go high of the day, boom, low, swing high, touches that EMA, boom. Now we've got that move. We've got that in the books. That happened. We've been on that.
Like on mine, when I'm doing it, when I go on mine, I hit the high of the day was my first click, and then I drag down, but it's giving me my level. It seems like upward versus yours.
So you're using it. It's because you're using the retracement. So this is the extension is 3 points. The retracement is 2. So
yeah, I think that is exactly what I'm doing.
Retracement is obviously retracing, going back, and so whatever trend you're in, you're getting a retracement for, because everything moves in a wave. It has to move in a wave, and so we're getting those levels for a pullback. And for an extension, we're measuring the first move, and then there's some equation. It's kind of a simple equation too. It's measuring how much it pulls back. And so you're measuring the first move and how much that pulls back off that first move. And then that gives you the expected next move, essentially. And so it's the extension, right? It's Fibonacci extension of the last move that we had. And so they're used for different things. If you look at my chart that I have now, I've got this one that I'm circling. This is the first one we drew in, the high of the day. Now the next one that we drew in was from that initial swing high right here down to the low of the day, and then back up to right here. And now we've got our price targets for this next move that's currently happening. Fortunately for this video's sake, that's pretty awesome. And then if we had mustered up around this level, remember we drew that Fibonacci extension in, and if we had mustered up enough to get back over the 21 EMA, the orange line, and we trended back up towards the VWAP. Well, if you look at the VWAP, which is the thick purple line, that corresponds really well with our Fibonacci retracement zone. That's this zone here with the yellow, green, 2 green lines. And so that would have given me a really good sense of like, is this a natural retracement for a continued move, right? If it's in that green zone and then it continues its move, chances are that move is going to continue on. If it goes above that green line and it's in the kind of the yellow territory, well, it's a really good entry level. But if it goes above that 106.78, the 61.8% retracement level, or the yellow dash line, I should say, well, then now we've got a situation where it's probably going to reverse. That's why it's a good place to enter, because if it goes above that level, we can cut it really quickly in like really no harm, no foul kind of thing. I mean, this is the secret sauce, my guy, to be honest with you. I mean, obviously there's way more to it. Like you've got to be pretty aware of like how strong of a trend it is. But that's why I have my EMAs. That's why I have the 9 EMA, 21 EMA, and the 55 EMA, and I've got the VWAP. Yeah, I mean, I think my strategy for like on chart is you don't need anything else. I don't ever draw a trend line. Like I hardly ever draw a trend line because I already have it built in with my EMAs. So I never have to waste time doing that. I only ever have to put in like low of the day, high of the day, or key price levels, or I use my Fibonacci's to do that. So, and like you see right now how it's trading, it's literally like pushing into that 61.8. And like we said earlier, you understand the candle retracements. Well, it hasn't even retraced this candle by 30%, right? So right now we've got a big thick red candle that came in, the biggest one since, you know, like 11 o'clock this morning. And we've got clear consolidation candle forming right now. If I pull up the active trader, oops, not active trader, time and sales, we can see all of the activity that's happening. It's a lot of red. We're getting a lot of resistance on this 94 price level. And so I'm pretty much like, I can say with 95% certainty that this is going to continue to break down into our next 78.6 retracement level. I still have that original 161.8% retracement level built from our first extension. And so that's actually right now, that's my price target. I think we're probably going to go down into the zone between $92 and $91. That's kind of my zone where I plan on offloading if we don't reverse here. When you're new and you don't know what you're doing, or even like you do know what you're doing and you don't have these lines drawn in, it just looks random. But it's not. Like these price levels are psychological. They're very structured. I mean, it's way more three-dimensional than like what we can actually see with just with looking at a naked chart, until you get good enough where I can actually look at a naked chart and like I can kind of visualize all these lines. You know what I mean? I obviously keep them there because it makes my job way easier when I'm scanning for stocks. But if I were to look at a chart, just one chart, somebody's like, hey, look at this stock. Like I don't need all of the EMAs and all that shit. Like I can just look at it and I can draw in key price levels based on just inflection points from the past. And that's something that you can do if you want to add some confirmation and confidence to your price levels that you've drawn in with the Fibonacci's. I've got all these Fibonacci's that I've drawn in today. And if I go back and I want to draw in a price level here, well, or let's do right here. Look at that. Perfectly corresponds with $100. I mean, that's pretty obvious. But that's a Fibonacci level that we have. Or right here, that's not really. It's right in the middle. But I don't know. It's kind of redundant in a way. But it's like that redundancy is really, I don't know if that's the right word, but it is. It's like, it's just like repeated price levels over and over. Once you realize like that everybody's paying attention to these price levels, what goes up must come down, and when it comes down, it looks similar to when it came up. All right, you guys. So as you saw in the video, the Fibonacci extensions are a key tool to understanding where price is gonna go. If you wanna see that trade video and understand a little bit more about what I'm doing besides the Fibonacci, make sure to check out the top left corner for that video. I also have another video of me setting up the Fibonacci extensions and retracements on a TradingView platform that will also be linked in the corner there. So make sure to check those videos out. That's it, you guys. Make sure you manage your risk. Make sure you are using price targets and these support resistance levels. They are super important to your trading. And without further ado, have a great rest of your day, and we'll see you guys on the next trade and the next video.